Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping back down into the world of Bitcoin, which is leading the pack when it comes to this crypto pullback that we've been having most recently. As I get into this video, if you find it useful, informative, entertaining, you know what to do. Smash that like button for me. I really do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, stay up to date with the live streams, the videos that we do here at Cheeky Crypto, and don't forget, join us down in Discord. Link is in the description below. Okay. CPI data has come out. CPI data has been perceived negatively. Let's talk a little bit around this. So the US inflation report, the price pressures remain stubbornly high, right? So inflation did not ease as expected in August. This is that no shit Sherlock kind of moment, with an 8.3% rise in the consumer price index, showing the squeeze on consumers remains acute. Basically, inflation came in faster than expected in August, even as the gas prices fell, which basically tells us that even though those gas prices were falling quite rapidly, they still couldn't curb the inflation. And again, no shit Sherlock. As again, we kind of go a little bit deeper, markets are shuddering on the higher than expected inflation numbers. Again, we speak about this every day, every morning via the live streams. We know this is not something that we were not expecting. We were looking for downward price pressure. We didn't know what was going to cause it, but it's something within the data. Fundamentally, people are feeling very, very fragile around their assets, and we can see that from the Fibonacci numbers. Now, we can also see from Elliott wave theory, we're expecting a pullback, and hell, here it's here. Gas prices had fallen for the last 91 days straight, basically relieving some inflationary pressure. Now, had that not been the case, the US inflation numbers would have been significantly higher. So even with the easing of the gas prices and travel costs coming down slightly, it hasn't really relieved the pressure for inflation. Again, we all know why. Inflation explained, the good, the bad, and the uncertain. That's kind of what's inside this article. I'm going to link this in the description below. You can get a good idea as to wonder what's going on there. Really, I'm talking about this move, though. I want to know what this means and what this means going forward for BTC. Again, nothing much has really changed from the bigger macro outlook. We are, of course, in bearish territory, and we speak about this every morning via the live streams. That hasn't changed. Our macro still stands incredibly bearish. However, we should also note that you do not move in straight lines. This is a big red candle to the downside. This is not something that is going to continue going to the downside in straight lines. We should expect natural bounces, and on those bounces, we'll then look for further downside afterwards, okay? So this has been the first kind of move to the downside. Now, as we were talking about this morning on the live stream, we were at the top of the wave 5, right? We're at the top of the wave 5 move, basically indicating that we should be thinking about downward price pressure according to Elliott wave theory. Okay, now I was looking at this morning, we were actually in the oversold area, went up to the overbought area as it continued to finish off this fifth wave high. Now I can map this out, so because now we've had this significant move to the downside, we can see exactly what's going on here. It is 1, 2, 3, 4, and 5, and that's 5 waves inside our fifth wave. We're done. Okay, so the upward price pressure is finished. We know this. We can now move down, but we're only looking for 3 waves down. Okay, if this initial drop here is wave 1, we'll then look for a wave 2 or an A wave down and a B wave up. We'll then look for a further move to the downside afterwards. Okay, so I'll be looking at this as a wave A, this looking like some kind of area of resistance around 22,100, and then we push down into a C wave, 3-wave drop. Okay, that's my expectation. Now, there is, of course, the potential that this turns into something more sinister and it turns into a 5-wave trend structure to the downside, but I wouldn't expect that just yet. I think that comes at a later stage. Okay, we have had 5 waves up, as I speak about every day. 5 waves are not normally on their own. We normally expect to see 5, 3, then 5. So we look for 3 waves down, 5 more waves up, right? So essentially, if I map that back down, we can see that we'll look for this potential kind of 3-wave structural move, maybe just bringing us down a tad lower. We don't know where that's going just yet. And then, of course, we look for additional 5 waves up, right? And we look for that higher kind of range. And, you know, that basically completes what is known as a zigzag pattern, an A, B, C, like that, right? It's a three-wave structure. So that's kind of where my mind is, expecting to see when it comes to BTC. Okay, now obviously there's the potential that it just moves straight down and we start to really bounce down and we have those impulsive triggers, and actually, you know, that's aligned to the slightly macro view, right? We have 5 waves down here, but I was looking for 3 waves up, not 5 waves up. So knowing this, we've either already did the zigzag and the 3-wave structures in here and I've just mapped it incorrectly. That's always a possibility. Or we have 3 down, 5 up, complete 3-wave structures, then move down into 5 waves afterwards, which of course would, in my opinion, take us down into new lower lows. Unpopular opinion, because we've got so many indicators that are saying that the bottom is in. Essentially, that isn't necessarily the case because, well, we went through that video the other day on a live stream of what is different in terms of the variable data that sits in the background as to why those indicators might be giving us false flags this time round rather than positive flags. So we should be very aware of those things. But as I said, right, we've had the CPI data. The CPI data is being perceived negatively, as in people are getting a little bit scared out of their assets, shaken out of the space, explaining or thinking that the downward price pressure is going to continue. Where we are right now from our stochastic RSI is we can probably see a little bit more volatility just down this lower end down here, but essentially we're going to be looking for a bounce to the upside. Okay, 22,100 seems like the most probable zone at the moment. Now if I come up into our 4-hourly, we can see that this also has to kind of bounce, right? We have to see this from oversold back to the overbought area along with our hourly chart, but we cannot ignore that there is a bigger macro piece going on here. Our 8-hour chart, our daily chart, our weekly chart, these need to go down significantly. Okay, so where we can be bullish on the 1-hour charts and we can be bullish on the kind of 4-hour charts, those are short-term moves, micro movements within the space. And in fact, you know, what we really want to do is really zoom out a little bit here just to get stock and take stock of this entire situation, which basically is more bearish on our macro timeframes. We are going to be talking about in the very near future, in my opinion, moving towards that range of $16,000, right? $16,000 would be a nice area to land on. This also means that we're not trending down. If we were to go down to $14,000, then we're in a whole world of pain as we start talking about the possibility of slipping down towards that kind of $10,000 to $9,000 range, which we spoke about not too long ago on the live streams as well. So essentially here, when it comes to the volatility that we were seeing today, it could have gone either way. Elliott wave theory was telling us that it was going down, but the stochastic RSIs weren't really giving us an accurate representation of what is going on. And, you know, I think for the most part, there's been many people in the space that actually did call this one quite correctly, right? We're looking at the data and sits in the background and actually were being very, very clear about what they were expecting to happen, right? There's obviously always going to be those bulls that want to kind of see this price kind of move to the upside, want it to go to the moon, and that's fine. I want it to go to the moon as well, but we can't just sit here and lie about the data and tell you something that simply isn't going on. So for now, that's kind of where we sit when it comes to BTC, right? We see this moment of volatility. I'm expecting a bounce to the upside before we continue this move to the downside. I'm looking for 3 waves, and I think by the end of this week, we may actually complete all 3 of them. So it'll be interesting to kind of see how that plays out over the course and the remainder of today. But again, something that we were expecting to happen. We knew there was going to be a moment of volatility. We saw the squeeze with the Bollinger Bands. We can see that we're at the top of a 5th wave, getting that exhaustion point on those macro timeframes, looking for negative price pressure. The only 2 timeframes that are actually looking bullish right now are the 1 and the 4-hourly charts. Other than that, everything else tells us that we should be thinking about bracing ourselves for a bit of a winter. So a lot to think about, lots of things to kind of consider when it comes to BTC here, and you know, essentially I will leave the video right there. Join us down in Discord if you want to talk more about what's going on. Join us on our Patreon services if you want to understand more about the trading aspects, or the kind of meet us on the AMAs twice weekly, all of that kind of stuff. So why not check all that stuff out in the link in the descriptions below. Guys, until the next one, have a fantastic day.